Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see. Oh, let's try the chat line just real quick here. Make sure I can hear me. Can I hear me now? There we go. Yeah, that looks right. Yep. So we must be able to hear me too at the same time. Let's turn up the volume. Can you hear me now? Hear me too at the same time. Oh yeah, there it is. Okay, excellent. Okay, we're, as they would say, 5 by 5. We are running hot, steady, and straight. And there we go. You see the Swiss still hesitating to climb back up inside over to the channel, so that's kind of interesting. The dollar is bouncing around like a pinball machine at the moment. I mean, there's a lot of concern. And when I say a lot of concern, there's a lot of people calling me who know I'm involved in this industry, and they're asking me questions about, are we going to lose the dollar? Are we going to lose the dollar? I doubt that. That one's a weird one, because of the size of the planet and how dominant, the United States is involved in it. And I don't, that if we lost the dollar, we'd lose the country too at the same time. And I think it works the other way around, really. You lose the country, then you lose the dollar. So no, I don't see us losing the dollar. Will paper currencies have as much value? I think that's the better question. To me, I think that as long as you're producing a item somebody else wants, then logic says to me that there will be paper currencies on some level. Obviously I guess the bigger question is how do we phrase this correctly and make it sound intelligent and not crazy? What I really think what it comes down to in the end is that currencies and productivity and more productivity or capitalism versus less productivity and the lack of capitalism, I would imagine that is really the answer to it all in the end. In other words, that is probably what it really comes down to. And I don't see it any other way. So I think currencies will be around for a long while, and I think that there'll be products to be traded in them because people are going to manufacture something in Germany and they want to sell it outside of Germany or the European Union. And somebody outside that arena will need their currency to pay for the currency. They'll trade their currency for the currency that the product is being traded in, which is euros. And so, to me, I don't see why currencies would disappear. Now, I can see possible ways of clearing and transacting, making it easier, but isn't that just the evolution of banking to begin with? So I don't see that as bad. It just is just part of it. That's all. And think about it. I mean, 20 years ago we had all these trading desks and all these private banks, and we had, there were. You ever see those pictures of like Greenwich, Connecticut, where all the major institutions on the planet, like Deutsche Bank and so forth, had their trading rooms? And now they look like empty stadiums. They're using 1/10 of it now, and the rest of it is just flat out empty. Those days are kind of gone, because they moved away from capitalism and they moved towards socialism, and so in the end result, the banks catering to socialism reduced their need, the need for the banking, and so I see all that. Allah, I say, Keita, hello, how are you? Ala Keita. So all these phone calls I've been getting of late, it's like I don't really worry about it too much. Will the dollar be weaker? Yeah, that's what we're looking at right now. The dollar is weaker against the Swiss at the moment. Will it be stronger on a given day? More than likely, unless the Swiss find a way to produce, everything we produce on large scale. And what I mean by that is, the United States seems to produce 25% of the food in the world, of the commodities we produce, like corn, wheat, soybeans, and so forth. We produce, 25% of the world's manufacturing. We're under 400 million people, so, and it's an 8 billion people planet. So obviously we're very productive. Even when we're stupid, we're productive. So that's where my head is at out of this whole event. What instigated me to think about it harder off the beginning of the webinar today is that the United States has printed 40% of all the money that it's ever printed over the multi-decades, just in the last 2 years. So, I'm sure people are nervous about that. But then when you look at Japan or China and so forth, or Europe, they're in much more deeper debt than us relative to our GDP. So, in other words, our debt is like, we have a GDP of like 21 or 23 trillion, I don't know, it bounces around like that. And we're in debt of like, 29 trillion, whereas like a Japan, or Germany has 400, was it $4 trillion, or maybe it's all Europe, $4 trillion total, or maybe it's just Germany alone, just 4 trillion, and they're in debt for like 50 trillion or something, some crazy number. In other words, it's 200. I know that Greece is 250 times. I know Japan is over 300 times more than their GDP. I know China is the same way. So, we're in really weird terms. As much debt as we're in, it's not that insurmountable because we make the money. We make the money. Hey, Jordan. So that is my conversation of the day. I thought that to start it off, we're printing a lot of money here. You would think the dollar would be weaker, but the problem is that the rest of the neighborhood is even more, has less strength, basically. So that's what the issue really comes down to, is that as weak as we are, the rest of the world neighborhood is even worse. So it kind of leaves us in that strong position still. All right, no matter how ridiculous we are. So that's where we are now. Let's get rolling along. Let's take a look at the Swiss. As you can see there, the dollar is obviously a little weaker today. You see it heading down. When the Swiss is going down, the dollar is weaker. And you can see here we are even flirting, trying to get into the minus. We got our super, the 5, is actually minus today. Trying to, it's a prelude of possible weakness. It usually can do that. See that right here? Going back about 7-8 weeks ago, you see how it breaks down first. Next thing you know, we start to get that weakness. Oh, I didn't mean to take that, whatever that is. Let's put that back. That was a line we were playing with. I don't know how I grabbed that. But let's just get rid of it. That was part of that triangle thing I think we were looking at one point. Let's scrunch that up real quick. Let's see if I can fix that. Because every so often we get into the conversation about that triangle. That's what it was, the channel. It was the change of the channel. That's what it was. That's right. It broke that. And that's where we are now. You can see that, and that was and it went back up to the top of the range and got through it a couple times. We thought that because of inflation, it was going to shift a little bit. But anyway, that's where we are with the dollar against the Swiss, and you can see that it's trying to get firmer on the Swiss side of it. There's buy Swiss, sell dollar. All right, and you can see we've been in the daily. Let's widen this out a little bit. Right there, you can see we've been in a daily sell for this is the 5th day. Not really dropping too hard at the moment, but the weekly, if it weekly does slide into a weekly sell down in here by the end of the week, then it might be signs of, again, weak dollar. Then we go over and we check it out on J4X right there. And same situation there with all the red hinky ashes, as you can see. Grab the wrong mouse right there. So you can see that. What else can we say about all that? We can say that, it's just pressing along. And you can see, let me go over to Bitcoin really quick. That alternative of currencies is not doing too good a job of the alternative yet. It hasn't, maybe it's like a little bird in an egg. Maybe all we're really seeing is the pecking of the egg when it goes up to 65,000 and so forth, or 69 or 72,000. Now we're backed off into the 56, 57,000. And we're in a weekly sell for 3 weeks, and it's like, wow, with all this calamity going on, why isn't it not at all-time highs? But maybe we're just evolving. Maybe the cryptos are slowly evolving, Let's take a look at it over on the J4X. They have a crypto on there, too. maybe the crypto, and I'm a big fan of the cryptos. I really do think that you should have some. It should be in every person's portfolio. Let's see, where's it at? There's the Bitcoin right there. And so, oh, you can see here on the Chicago, the J4X right there. You see a couple greens for 3 days in a row, and trying to show that strength. Over here on the Chicago Quant, you can see the issue has been, we've been more reddish, and it did get one green out of the three, and now we're in giving us a volatility signal of a red and a green. So, and you can see this is rolling over, and you can see, let's emphasize that a little bit stronger, like make that thickerish. There we are. See, same thing's going on. Oh, it's a little too thick, isn't it? Let's bring it down one. There we are. As you can see there, it's trying to roll over. Yeah, it's trying. So, all right, it's still holding up in the daily buy by the hair of its chinny chin, and it's in the weekly sell. So you don't want to be long it when it goes in the buys. You want to be short it, which is kind of adverse to the concept that the dollar is going to disappear tomorrow morning. All right, I'm sure our math would pick that up very clearly if it was going to disappear tomorrow morning. Let's see, let's jump over to, let's go back to, where do we go here? Oh, that's right, we go back up to the currencies. Let's take a look at the euro this morning and see how the euro is acting again. There it is right there. And, let's see, right there, okay. And you can see the euro, so where is it at? Right there. Perking up, bounced off that Fibonacci down in here. Our math turned up. We went into a daily buy just as it was bouncing off that Fibonacci. That's why I always say our math is ahead of the Fibonacci sequence. It knows. It knows when to be long and when to be short more than anything else on the planet. And if you can find something better, please show it to me. I would like to combine them together, that's for sure. Right. Where is it at? Right there. Let's see now. Let's see. Let me do. I just want to change that, and it's loading up on the J4X. We'll see where the euro is at that. There we go. And that's the action we're seeing there too. It's doing that lift up thing. It's through the buy on a daily basis there. So. Let's see, what else do we got brewing on there? Let's see. There we go. And when it comes to this, you can see the same thing. It's just kind of hanging out, not exploding, just kind of hanging out. You can see it's trying to turn up just like the same way J4X is right there. And let's see, what else do we got going on there? I guess that's about it when it comes to the euro. I don't think there's much more to be said there. We're going to jump over to the cable now, unless someone wants to investigate it a little bit deeper. I have no problem doing that. And let's check her out. Cable, right there. I did see it this morning through the line on my work. And we're going to take a look at this at the same time. And this was showing the same thing. It was trying to lift up. And I think we haven't started yet on the green. No, see right there, we haven't started the green yet, but we will. And let's show you over there, because we are through last I looked. Right there. Yeah, see it's showing some life. You can see it right there, it's through. We got a red and a green here. And but the weekly is still not lifting enough to get me too excited about the product. I think that I am deeply concerned that without that lifting, there's no particular reason to try to get long yet. But it keeps on rattling my cage. It keeps on saying, hey, you better look at me. You better watch what I'm doing, because I'm getting ready to lift. So. All right. And then I heard there was I don't know, I keep on seeing headlines. I think they're behind the curve. I keep on seeing headlines. Last night I saw more. Yesterday I saw some, the headlines about the Turkish Lira. He replaced, I guess, somebody in the central bank that is more, I'm not sure what they more are. I think I'll let the math show us what they are more of. So let's go to the Turkish Lira. Right there, and I did see it at all-time highs yesterday. So it's already in the marketplace. It's firm again today. Third day in a buy. So many months now in a buy, in a weekly buy itself. And then let's take a look at it at the Turkish Lira against the Euro. Right there. I'm sipping my tea because I've been chattering. Let me just sip a little bit more. And then we will swallow it all. And then, as you can see right here, the Euro Turkish Lira, marching up, and it was it a day ahead of time than the dollar Turkish Lira. Again, that seems to be the real leader when looking at the Turkish Lira, the Euro Turkish Lira. And you can see right there, which day? That is 1571. This one is 1570, and today is 1533, almost 34. So it's just hanging out at the top ends of the range. So whatever they did at the Bank of Turkey, or their Federal Reserve, or whatever they call it, central bank, whatever. Obviously, it's built into the market already. They knew it was coming. It was probably this whole move here. They knew that he was going to get rid of whoever he got rid of, and he knew that they were going to add whoever they added. And that's where we are with the Turkish Lira against the Euro, or the Euro against the Turkish Lira. Now from there, we dance our way over to the Canadian, right there, and you can see the Canadian, which usually is like a kind of an indication of what's going on in the metals and the energy market. So with this thing rising against the dollar, it tells us basically that the energies are kind of weaker and the metals are kind of weaker, which is really odd in a world that shows anywhere between 4.5 and 6.5 inflation, and we're watching 10-year bonds trade at, what is it, like 1.43 and 1.44. So it's way underneath. And there's lots of people here in the States, very responsible people, saying, please end this QE, get it over with. Oh, we just made that too big. So that's where we are there. Now let's check out the Canadian over here. Dollar CAD, right there, marching up. And because it's marching up on J4X the same way as here on the Chicago Quant, obviously we're going to go run over to the energy sector and take a quick look at what it's doing. And right there you can see crude oil is flat today, and still in a daily sell since this crazy wild gap there of last Friday. And in other words, as weak as that day was, the buyers have not been able to dominate it, which says a lot. At least it says it to me. Now, we've been in a weekly sell since back in here in the 80s. So, it's not that much of a surprise, but it is a surprise. I thought that energies were in desperation. So this must be the Biden administration taking oil from the reserves and putting it into the open market and bringing the prices down at the moment. And once they run out, they'll go flying back up again. And that's usually the way it works there. And you can see it over here on our fact check. Whoop. Let's do this. Scroll up a little bit. Right there, you can see 4 days in a sell and 4 weeks in a sell. This is our 5th week now. 1, 2, 3, 4, going on a 5th week. Same thing over here on the J4X. You'll see this weakness in the energy sector right there. There it is. And that's still on the daily. Same situation, lots of weakness. And not much more to be said about it than that. Now over in the metals complex, there's gold. Gold is doing something. Now yesterday it was a little bit firmer, I believe. Let's see where it's at now. You can see it's not really reflecting any real firmness at all, but I think it was actually up for the day. Could have been. Let's take a look and see. Yeah, it was up for the day. But today it took out 2 days lows. So it took out Monday's lows. Monday's no, Tuesday's low. It took out Tuesday's low. So, you know, it's at it had bounced down, now it's bouncing back up a little bit. But look at the weekly. This one makes no sense to me. The weekly is really battling with the daily. You know, they've come down from some real high area. I don't think we've been up in the fives. I mean, look at it there. I mean, what is that? That is that's like 2 something. I mean, we were up so high. I mean, there's the 10s back in June when it was trading at 1900 and change. So we were up pretty high. We were up in the fives. It failed. It was a lower high in our math. And the daily protected us. We were in a sell from the 1860s area, 1855 area. And now it's trading in the down to, I guess, the low of 1767. So it has protected us. Our math has kept us honest. In other words, you can't be long from here on. You had to be flat. You weren't short, you just had to be flat. Hence, I was giving recommendations on here, or giving opinions, or however you want to describe it, of our news, you know, letter, or whatever we want to call it, our technical analysis thing, basically saying that you wanted to be hedged. You had to be hedged up in here. And sure enough, it was a legitimate direction, and that's what happened, and that's where we are. But what's curious is that this thing does not seem to want to let go on the weekly. So as much as the short-term money is holding it down, the longer-term money is saying, not so quick. And that's not true in a lot of the other metals, in the other metal complex. And we're going to go explore that after we finish off the last of the 4 currencies that we watch. And you know, we're going to jump over to the South African Rand, which we're assuming is basically sideways to down, or I guess sideways, yeah, sideways to down today. Let's take a look and see. Right there, dollar Rand, yeah, sideways to down. And you see it's in a daily sell for, is it there too? Is it 3 days or 2 days? No, so it's only, this is the second day. So it's in a sell. Let's grab that little red right there. Just move it over like that. So we went into the sell there. And I guess we have to fix these things. Style, screen, scaling, screen. So you can't see that. Let's put the green ones in there. Screen again. There we are. So it couldn't go into a sell that day because, oh no, yeah, it did. It goes into a sell there. Let's fix that. So I went into the sell there, and then the next day it just goes right back into the buy. But you're in a weekly buy to begin with, so you can't get short. All you can do is sit there and be neutral for a day. That's all it is. Because you can see here how it's just been in a weekly buy now since the, where's it been in a weekly buy? Since the 1500 area. And it traded up to the 1600 area, 1636 area. So, all right. And then, let's see, we jump from there, and let's also take a look at it through J4X. Right there. Same story on a daily basis. There's Jordan. Hey Jordan, can I ask what the dots are and what they do? They're my old math. I've been using the dots since the late 80s, I guess? Something like that, 1980s. And they represent the same type of mathematics that's right here. Only difference is that they don't have the, so I take the formula that makes them, and this particular, this formula right here, this indicator right here, the gas line, has, and that's why we call it a line, and then the gas is the energy. It has the stochastics in it. So I commingled my formula with stochastics. That's why it matches up really well with J4X. So when you're looking, you can see like right here, on a day-to-day basis, you see how it's curving down. It does the same thing, it curves down. What it does is it advances my math to be like, you know, hours ahead of everything else. And so, and then the weekly does the same thing. And so then the histogram, and then the you see here what we call the nonlinear time manifolds, where our mirror images are right there, those orangey lines. That is a standard deviation. a 1 standard deviation of my math. So I combine the concept of a 1 standard deviation to my formula. So what you're really seeing is like a Bollinger Band with my math in it right there. You're seeing a stochastics with my math commingled into it right there. And so it just advances the, you can see when we look at J4X, take a look at this indicator right here that we've developed, you know, the fast versus the slow. It's a much more advanced indicator than any other public indicator that's out there, like MACD or RSI. It's always ahead of the curve. But, you know, in other words, it's ahead. It predicts the direction of a product faster than the MACD, faster than the RSI, but slower than obviously my math, because my math has that extra sweetener. It has a spatial characteristic to it of nonlinear. So my math functions through a nonlinear math time frame. How's that? Did that make any sense to you? And you'll be able, remember, this is going to be recorded, so you'll be able to play that over again at the I guess the 24-minute period or 25-minute period. You can grab it, advance it, and then have me, you know, and then you can listen to me repeat that. Does that make any sense to you? As we take a sip of our tea again. So the dots are the old math, not smoothed. The gas lines are the old math smoothed by 1 standard deviation and by a stochastic. And at the same time, obviously the whole key to it is the old formula itself. There we go. Explanation. Simplistic. As far as I'm concerned, the beauty of mathematics is the simpler the better. Not how neat it looks, but how simple it is to calculate. All right, so in other words, simple math is better than complex math, as far as I'm concerned. Now, I look at topology as a simple math, not a complex math. That could be a problem for some people. I'm sure a lot of people look at topology and go, that's not a simple math. In my head, it is. All right, from there, let's see where we're at now. ZAR, so let's go take a look at the ruble. Right there, there is ruble. You can see it's been in daily sell for 4 days. Let's check it out on J4X. The rub right there. And you'll see all these reds with the Hinky-Ashi. Hinky-Ashi emulates my dots on some level, but again, nowhere near as, what's the word I'm looking for here? Nowhere near as sensitive, let's say that. So you got 4 reds. In our case here, we have 3 reds. It's marching pretty much the same way. So if you don't have my math, you know, and you're not accessing, you know, coming to the webinar every day or subscribing or whatever, it doesn't. We're not pushing a subscription, so it doesn't matter. You can always go to it and get a free one if you want. But you know, overall, if you're not seeing Doc's work on the Dukascopy webinar every day, then you want to have this J4X formula that we have up there. You know, with the Hinky-Ashis and the fast and slow stochastics. Sorry, I didn't really understand, but I'll get there. Just got to keep learning. No problem. Also, at the 24-minute or 25-minute point on the recording, when Dukascopy releases the recording through YouTube, you can go listen to it over and over again a couple times. It's a very simple explanation when you are able to listen to it a couple times. Now, it doesn't give you my formula, of course, but what it does do is it gives you an insight to the J4X formula that we've developed. And we always show you the numbers in it. You know, we're very quick to show you the inputs and how you can, you know, use J4X to trade off of using the same formula. So it's better than nothing. And have you? It was you, Jordan, right? You were trading the 1 minute, 15-minute, and the 1 hour, right? So are you starting to look at it in a spatial way through ticks or contracts? Try to do that more too. We showed you yesterday how important that is, you know. that'll put you ahead of the curve also. All right, now there's the ruble, and you can see where that has left off. Let's jump over to the yen. And there's the yen on J4X. And they're, banging the bottom of the range. Over here, it's bounced off already and starting to turn up. We'll see how that goes over the next day or two. The dollar is obviously weak when the yen is going down. There are less yen to a dollar. So not only, you can see the cables moving up against the dollar and the euro's moving up and the Swiss is. And the only one so far is not is the Canadian out of the majors, Canadian seems to be, I'm not sure what that issue is all about. It could be literally, just the fact that it's, the way Mr. Biden's policies have an effect on Canada since they're neighbors. So it could literally be just the bozo action of Mr. Biden, It literally could be just that. The pressure on Canada. Because he's trying to shut down another pipeline again. And every time you shut down one of these pipelines, it hurts Canada. Yeah. I had to sip my tea one more time. There we go. All right, so let's go over to the Mexican peso, our other neighbor, who is also having an issue. The currency has jumped up to 9-month highs or something like that. If not higher, actually. Let's go back and take a quick look and see how far back. Last time it was up in the 22s. That was in March. So yeah, so we're basically 8-month highs, something like that. So March, April, May, June, July, August, September, October, November. We're in December, so 9+ month highs. And it took that out. And you can see there it challenged. What is that? That is the that's the November 3rd highs of 2020. It took out that also. So Mr. Biden's policies are having an effect on our neighboring countries more than that it is further out, that type of thing. Hey, 47. Let's check it out. Oh, Jordan says, yeah, been practicing with the 1 hour, 15-minute, and the 1-minute Stoch, and some success. Just needed to learn when to enter on what signal. Yeah, you gotta let the bars close too. Don't jump ahead. Do not jump ahead. Follow your practice. What you're doing. That's good. All right, now let's go over for 47, and let's check out the cable yen. Let's see, right, cable yen, right there. Now, cable yen last time, where was it at? Right. Okay, so right there. Last time we checked it out, it had gone. It was in a sell in the morning. Did it close in a sell that day? Yeah, it did. So we can take this and just make it go down all the way like that. So it went into the daily sell that day that we were looking at it with you, and then it collapsed in. You can see we've been in the weekly sell since right there, and now we are lower. Before it was more higher than it was lower. We'd play with it, but it wouldn't break. And then finally, once we got in the daily sell, the two lined up together. It was winner, chicken dinner. So there you are. Still hanging out down there. A little bounce here today, you can see. Nothing major. Let's check it out on the J4X. GBP, JPY, right there. You can see the pressure on that, just the same. Doing the same things. You can see we're at the bottom end of the range there. So last time we worked our way down to there, it took, we need to get a green hinky. We're going to need the white line to turn up for it to start showing the strength there, just like it did. Let's see, what was the date there? That was the 11th of November. Okay. Yeah, the 11th and the 14th of November. And you can see right there, there it is right there. Same situation. Our math flipped. We went into the strength. There's the 14th thing going on there. And because there's the Friday. So it's 12 and 15 versus 11 and 14. Just because of the European situation time-wise. And you can see here, at the same time though, it pushed it into the weekly sell, so you knew not to be short. And if you were doing binaries or options, it was okay to be long, but you wouldn't want to be long the hard delta itself. But then when it joined in with the daily, then that was okay to be short just the pairs trade itself. And sure enough, winner, winner, chicken dinner. From 154 down to 150. Alrighty, and if anybody else wants to see anything out there, just shout it out. We're very happy to jump around. We love looking at other other products, because you never know when you're going to find a trade. That's the way I look at it. I've many a time I've jumped in on another trade, something I don't even trade, because someone said, hey, take a look at this, and I look at it and I go, wow, there's a great opportunity. Did that with the Russell. It was like, oh, wow, all-time highs. And now we're in a daily sell, and sure enough, smack-a-doodle, it gets crushed. All right, weekly sell. Joined in with the daily, and I thought, okay, winner, winner, chicken dinner. And sure enough, they smack-a-doodled it. Let's see if we can show you. Where's it at? Right here. So there's the Russell 2000, and goes into an all-time high and into a daily sell. It's been there ever since. And we go into the weekly sell on the close of that week, and sure enough, it falls from, was that 22 and change, 22 and a half, 22.4, and now it's traded yesterday all the way down to 21 and a half or lower. So, it's a great move. That's, what is that? That's like a 4% move in just a few days. Jordan says, had some confusion in this session. The 1 hour was in it was a overbought zone, so was thinking short. Let's take a look at it with you. We saved that for you. Where's that? Right there. So there's the cable. This is the hourly. And so you're saying that the, let's see, so confusion, the 1 hour was in a overbought zone, so was thinking short, but the four hour, okay, so you're using that now, a 4 hour stochastic was up, so trying to work out how to deal with also the daily stoke and the oversold and so forth. Well, that's what you need to do. You have to build your tools, back test them until you feel confident in them, and then you'll make a real money trade. That's the way it usually works. Oh, you can't see. Sorry about that. There it is right there. And so what's the blue line? The blue line is the stochastic fast, and the black line is your RSI. Does that match up at all what you're looking at? Oh, let's see what while we do that and Jordan figures that out, we'll see what 47 said. Thank you. Why is the dollar relatively weak against the other currencies? Should it not rise when fear hits global markets? I don't think it's fear hitting the global markets at the moment. I think the fear is that what is it? I think that the inflation has an effect on it. So in other words, normally if inflation was at like where it had been for the last 11 years, then there wouldn't be, the dollar would be strong. But due to the fact that the inflation is coming from the United States, I think that's the issue. I think that's what the problem is. So that would make sense to me, because the bonds are not selling off at all. So, they're reaching for the bonds, because the problem is that the inflation is being driven from here in the States. Does that make any sense to you? I mean, pretty much the rest of the world is asleep when it comes to their financial markets. So, And I hope, Jordan, does this match up at all? I mean, whereas the RSI now is above the stochastic. So the stochastic is trying to tell you for 4 bars now or 4 hours to be short. And sure enough, it's going down. And I hope that makes sense to you, 47. It's the only speculative idea I can have. A theoretical idea in my head is that due to the fact that the inflation is being derived here in the States, the money probably isn't running as fast towards it at the moment, something like that. That's probably why the Swiss is looking a little bit firmer. They're distributing their risk out a little bit more. You would think, that's what I was saying a little bit earlier in the webinar. You would think that Bitcoin would be up, not down, because of that. But for some reason, the Bitcoin is down also. I mean, it's what, 10% down from its all-time high now. So the 1 hour stochastic is still overbought. So that means that it's still up high. Is that what it is? Whereas mine is, would you consider the blue line right here? Is it become, mine is oversold and yours is overbought? Is that what that is? Yeah, that's the only thing I can figure at this point. Yeah, so Jordan, yours is still way up here in the overbought area, like that, whereas mine is already rolled over. Remember, I'm using a fast stochastic. Are you using a slow stochastic? Shall I go hunt around on some of the stochastics and see what you might be using that you don't realize you're using? While you do that, I'm going to set my T one more time. Okay, I'll look around. Yeah, you might be using a slow stochastic. Let's see what happens with a slow stochastic. See if it's overbought. So what we're going to do is we're going to turn this off at the moment. Indicators. No, cancel. Like that. Indicators. And we're going to go, so stochastic fast, we're going to turn that off. How do we do that? Go like that? Yeah, there we go. And then we're going to add a slow stochastic and see what that looks like. Maybe you're using a slow stochastic. The S's. A slow K. Just a slow. I'm not sure. Let's try both of them. Try this to start off with, and style. So I'll get rid of that, and we're going to make that a dashed line instead. But it's still going to be blue, and everybody else is going to be invisible. Oh, you know what? Yeah, so let's go like that. There we go. And then properties-wise, we want it to be in 3, right? So let's see what happens. Okay. Yeah, I don't know. It's so the black line is the RSI, so that's still bullish, right? Until this point right here. So it is, the slow is taking a little bit longer. And let me just show you how the fast outdoes it. There we go. And let's make the slow a white line at the same time. I'm sorry, the fast a white line at the same time instead of blue. There we go. So you can see here, the fast, it petered out up in here, broke your RSI concept right there. But you can see here, your slow, the slow, what is this? This is slow D. It is the slow D, okay? Slow D is just breaking down the last couple hours. So it's way behind. Whereas here, right here, let's put a line in there for you. Yeah, see, it broke down there, so it was below your RSI. Now, if you really want to do it, like I said, do what I do on J4X. It's better. Fast versus slow stochastic. It's much more accurate than the RSI. It's way more predictable. Cool. A little research here at the same time. Live research. We all learn from it. I learn from it. Trust me. Believe me, I do. And let's see, what is it doing now? Notice it's trying to perk its head up. See that right there? It's at the bottom end of the range, and at the same time, it's through now the slow. And imagine if we get a green dot, it would be well worth being long. It'd be like the Hinky Ashi. The Hinky's going to be behind my dots, of course. But, you know, look at that. We just generated a green one. See, it's with a green red now, out of nowhere. And like I said, anybody that has an indicator that's faster than mine, please show it to us. I'd love to know. That's why I have no problem putting up indicators underneath my indicator so that we can explore and see who's leading. As you can see, my math is already turning up also. It's trying to get into the buy right there. It's flirting with it as we speak. And you can see here, this is turned up also. And if we're using Hinky Ashi bars on here, more than likely these guys are all red too. Jordan says, my apologies, but can you explain how to set up a fast and slow stochastic, if that's okay? Sure. What you do is you just take the two indicators. Let's see if we can show you. Over here on J4X, let's do J4X first. And right there. So we go with the inputs. Edit indicator. So, let's see, edit indicator. Here it comes right there. And that's it. There's the data, 5 and 3. And what we do is we put them in the same subgraph at the same time. So they're just running against each other. And this is the, which one's this? This is the fast. And when we go to outputs, it kind of shows you what we're following. And it's, okay, so this one is the fast D. It's not even the fast K, it's the fast D, okay. And then when we look at the slow, which is the dashed line, and the outputs, that is the slow D right there. And we just take the, and it's a 3. And so what we do is we take those, and you can go to the, was it 18 and 30, so it'd be 48 minutes in. You can look at the video after this is over with and look at it over and over again to see how you do that. You put them in the same subgraph, like that. And that's what we've done right here. Let's see. That's what we've done right here. Same thing, right there. I guess, you know, stochastic was used for atomic theory. You know, so I mean, it was a way of smoothing out. You know, probably best way to describe it would be smoothing out quantum mechanics. So it's an old form of averaging. You know, through a squaring or a division or something like that. You know, so it's not, you know. When you say look back, it's just slowing it down and thinning it, I guess you could say, or refining it. Whereas my mathematics is a consciousness, and it's living and breathing. It looks back, but it also looks forward. So I can tell where and when. Whereas like quantum mechanics tells us where or when, or when or where. Mine is always when and where. It's an and versus an or. Let me think. What else can we say about any of that? guess that all makes sense somehow along the line. Like I said, tune in at 48 minutes and 49 minutes in the recording, and you'll be able to try to take that apart more. So you can see here, my math is still trying to turn up here. This is an hourly too, so again, I'm not a big fan of hourly. You know, it's very sloppy. In other words, if we go to a, let's do this. Let's just make this a 396. You'll see the difference. Let's just do what I call a 1 Tesla. And you'll see how much more accurate it is. Hourly is, you know, fixed time frames are not really good, you know, it's just very behind. They lag compared to spatial math. Remember, there's no, I invented a spatial math. My formula invents a spatial math. So, you know, there is no explanation for it. Only from me. Now you can see here, using the same math and looking at the white, you know, it breaks down in here. You can see it flirts with it right there. We can move this line over to see that. You see it tops out in here, does a little flirt there for the move, and then it goes into a sell all the way down to there. Then it goes into the buy right there, and you can see up here, you know, the bar chart at the top, it goes up in value. Then, let's see, where's it at? Yeah. Now remember, the black is your RSI. It's not, it's way behind. Okay, so the black is your RSI. I'm going to make this even easier for you. I'm going to label them. RSI black. The dashed blue is, we're just going to call it Stoke, S-T-O-K, Stoke blue. And that's the slow D, there, like that. And then the white is the fast. We can just copy that, which is really cool. We go like this. Fast D. There we are. Is that too much run together? Let's see if we can fix that. Like that. Like that. There we are. Oh no, what did I do there? Alright, so now we gotta put the blue back in again. Oops. Oops. Let's see if it stayed in the memory. Yeah, there it is. Okay. I had saved it. So I guess we can go like that, right? So Stoke blue, slow D. I guess we go like this. And blue there. And then the black line, where can we put the black line? Right there, I guess right there. So RSI black, Stoke white fast D, right down in here. Right there. Move it over. And then the blue is the one below it. And there it is right there. How's that? Oh yeah. Yeah, it definitely. The fast and the slow outperform the RSI all the time with no problem at all. That's because it's a simpler formula. You know, it's an averaging. It's a percentage averaging thing. And stochastic is more sophisticated math. And then obviously my math is a more sophisticated math than is stochastic. And then after that, if you can find something even more sophisticated that works, tell us, because we'll try using it. Trust me, I would commingle it with my math if I could find it. I did that for decades. I have a great story, and then I guess we're going to get out of here. My sons go off to college, and you know, they've been watching my math, you know, since they were like, you know, 8 years old or 9 years old. I think I had them electronically trading when they were like 10 or 11 years old, you know, trading live money. And so anyway, end result is like um, they get into their college and their roommates, and I get this phone call from them, I guess about 2.5 months in, and they go, "We found a really great website." I said, "Cool, a trading website, really?" You know, I'm stunned that they even paid attention. So, end result is that they said to me, "We're looking at all the formulas, and none of them look like yours." It's like, "Yeah, I know." He says, "Yeah, no, you don't understand. There's nothing like yours." I said, "Yeah, I know." "What do you mean you know?" I said, "I invented mine. I told you that many times." "Oh, yeah, I guess." So, that's what it is. And then when you go to spatial versus hourly, it's much more insightful. I mean, you could go up to you could triple it, like triple the one Tesla, the 396, triple it to like 12 something or something like that. And you could try to make it line up with the hourly better. But it's going to be way more. Here, I'll show you before we jump off. So that's a 1 Tesla, right? Now let's go with something like a 12, 3, 9. Let's go with that. It's like tripling it. And let's check that out. Here it comes. I can say to you right off, it's going to be way more accurate than anything else you've ever seen. Because I've played with these numbers throughout the years. Waiting for history. Wonder if I can shorten it a little bit to make it faster. Let's make it 250. Let's make it 200. Oh, 250. There you go. There you go. Fills in. Okay. So the black is right there. The white is down there. And the blue is up there. And as you can see, let's see, where did it go into the cell? It went into the cell right there. Let's move that over. Like that. So it went into the cell from that one. Maybe there's going to be pressure and this thing's going to start moving down even more. And you can see when it went to the long, there's the long right there. And it stayed in the long all the way up to right there. And it started weakening, went back into a little long for a couple of bars, went into the sell again right there, and you had 2 bars of down. One actually made money, and then it jumps across again, and now you're in a long all the way to right there, maybe? I guess it broke here and goes back in there, and you're in a long all the way until that point right there, and then it puts you into the sell right there. And it goes down for 2 bars again. So, and then it gets really choppy in here. So, let's see what Jordan says. Thanks, Doc, for explaining that. Have a great Christmas, everyone, and a Happy New Year. Well, I hope we see you tomorrow or a couple of days from now. But thank you. Same to you. Merry Christmas. Happy New Year. This is Doc from North America saying Happy Trails to you. Until we meet again. Happy trails to you, to all our Dukascopy webinar trading friends. Ta-ta, traders.